I was that trader who would risk everything on one trade, thinking I could flip my account overnight. 5 years ago, I turned $10,000 into $20,000 in one day. Then I lost it all the next day. I was risking 80% of my account on single trades because I thought that's how you get rich quick with trading. Fast forward to today, I made $40,000 on a trade where I only risked 5% of my account. And when I post this, everyone asks me, how do you only risk 5% but make that much money? But here's what nobody's asking. And this is why most of you will blow your account. You're asking the wrong question. You should be asking me, how am I still here after 5 years to even take that trade? Because let me tell you something, that $40,000 trade only mattered because I was still in the game to take it. And I'm only still in the game because I learned how to protect my downside. Most traders think trading is about hitting home runs every time, but trading is more like being a quarterback. You don't just throw a Hail Mary every play just because you can. You wait for the right moment. You take what the defense gives you and you protect the ball. When I was blowing accounts left and right, I thought risk management was boring. I thought it was for people who weren't confident in their trades. But here's what I learned the hard way. Confidence without discipline is just gambling. I was treating this like blackjack at the casino, betting on whether the price was going to go up or down. But I didn't realize you can actually make this consistent. In this video, I'm going to break down exactly how I went from risking 80% of my account to risking 5% and making 10%, even 15% sometimes. The first thing I had to learn, and it took me years to figure this out, is that your position size should never be based on how confident you feel about a trade. It should be based on two things. What the chart tells you, whether price hits this level, you know that you're going to be wrong, and how much you can afford to lose. So when I look for a trade, here's what I actually do. I see a setup, I identify where the market structure would prove me wrong, and that right there becomes my stop loss. Then I calculate if my stop is this many pips away from entry, and if I can afford to lose X amount of money on this trade. Then I can enter X amount of lots on this trade. That's it. No emotions, no this setup looks good so I should risk more. Just simple math. 1 to 5% of your account is a general rule of thumb. Now you might be thinking, but if you only risk 5% per trade, how do you make any real money? And that's where most traders get it wrong. They think you make money by risking more, but you actually make money by being right about the direction you're betting on a trade and letting your gains compound. That trade where I made 40 grand, that was about a 1R trade, meaning I made 1 times of what I risked. And here's the thing, if you can average even 1R per trade and you're right 70% of the time, you're profitable. If you average 2R per trade and you're right 50% of the time, you're still profitable. Think about it like this. You win 5 trades at 2R each. That's plus 10R. You lose 5 trades at minus 1R each. That's minus 5R. Net result, plus 5R profit with a 50% win rate. But when I was blowing accounts, I was doing the opposite. I'd risk 80% to make 30 or 40%. Even if I was right 80% of the time, that one loss would wipe out multiple wins. But here's what changed everything for me. I started thinking about each trade like this. If I take this trade, am I comfortable with losing this entire amount? If the answer was no, I would downsize, period. Because here's the reality. If you're trading with money you can't afford to lose, your risk management will fall apart exactly when you need it the most. You'll move stops, you'll overtrade, and you'll increase size to make it back. I remember when I blew that 20K I made, I lost it all because I let the greed take over. I didn't respect my stop loss. I was over leveraged, and I held on to my trade until I got liquidated. I can stick to my risk management plan because every trade I take, I'm mentally prepared to lose that entire amount. That 40 grand, I was okay with losing it. And because I was okay with losing it, I could focus on being right about direction instead of stressing about the money. If you've been trading for years without consistent results, I completely understand. I spent 3 years in the same position, but AI is revolutionizing trading right now. And that's exactly why I developed this AI alert system with a documented 90% accuracy rate over 6 months. Over 500 active traders are already using our alerts to generate consistent returns. We are also so confident in this that we offer a money-back guarantee if you don't profit in your first month. So if you're interested in that, just click the first link in the description. Now, how much should you actually risk? That depends on what stage you're at. If you're still learning and trying to find profitability, stick to 1 to 2% max. Your job isn't to make money yet. It's to stay alive long enough to figure out how this works. But if you're trying to grow a small account and you've already found your edge, you might need to risk more, like 5 to 10%. Just remember, whatever percentage you choose, you need to stick with it. Don't increase it because you're on a winning streak, and don't decrease it because you're scared after a string of losses. You have to pick one, stay disciplined and consistent with it. The hardest part about risk management isn't the math, it's the psychology. As humans, we're wired to avoid pain and seek pleasure. So we naturally want to cut winners early and let our losses run, hoping that they just magically come back. I had to train myself to do the exact opposite. When a trade goes my way, I let it run to my target. When it goes against me, I take the loss at my predetermined stop loss. No emotions, no second guessing. That mindset shift is what took me from blowing $10,000 accounts to making 40 grand on a single trade. Look, I know this might sound boring compared to all the I turned $100 into $10,000 overnight content you see. But those traders, most of them blow up eventually, or they're just straight up lying to you. I've been doing this for 6 years because I focused on staying alive first. The profits, they just came second. The market will be here tomorrow, next week, and next month. Your job isn't to make money every single trade. It's to be here long enough to catch the big trades when they do come. If you're serious about making it in this game, you need to stop thinking about how much you can make and start thinking about how much you can afford to lose. Because the traders who focus on protecting their downside are the ones who stick around long enough to see real success. That's what separates the 5% who make it from the 95% who don't. It's not about finding the perfect strategy. It's about having the discipline to protect your capital while you execute whatever strategy you're using. If this helped you understand risk management differently, hit that like button and subscribe button and follow along for more videos.